All right, we're back. Sorry, guys. I totally messed that up. I'm like, man, there's only a couple people here. That's strange. I know it's daylight savings and all that. It's a little bit different time, but there's usually a lot more people waiting for me. Cool. So all of you, I think, just heard that. But sorry for those that were waiting. I opened up next calls in 2 weeks instead of going live on today's show. So I apologize for that. Good to see a couple messages in the chat already. We already got the disclaimer and agenda and all that out of the way. Kelly and I were just kind of chatting about it's going to be a lot of more of the same, or as they say, I feel like we're a definition of a broken record. We've talked about the same things for a little while now, but we can't fabricate what's not going on, right?
Well, sometimes you would like to. So in our particular case, though, as everybody noticed, yesterday was kind of a down day, but it was a kind of a strange down day. It was the kind of down day where the Dow was only down a little bit, but the S&P, in the S&P and the Nasdaq were down quite a bit. So let's kind of get into it a bit. So we just kind of go through our normal mechanisms so we kind of have an understanding of what's going on. Well, by the way, everybody, hello. Sorry about trying to advance the world 2 weeks ahead on our YouTube channel. If so, I wish I could have came back with you and tell you exactly where the market would be 2 weeks from now.
Right.
We'd all execute on something where I knew the answer already. But kind of that being said, it's not really too far of a stretch to say that the market will probably, and even despite what happened politically yesterday, end up on its highs. Remember, politics and the markets do go hand in hand over time, but not over hours. And so it takes time for things to melt in, for the market to absorb, the issues of the politics of the day, the news of the day, the economy of today, because what it's always doing is trying to predict what the economy of tomorrow will be. And so the market is the greatest prognosticator. If the market's going up, generally it's a meaning that investors feel good about tomorrow, so they buy today, and vice versa. So what's going on? I mean, again, as you know, we've been on these AI circles. I feel so mundane at this point to say that towards the end of July, when the market was going into the middle of the summer, where we thought the market would melt up, and that's exactly what's happened. It's melted higher, and it's melted higher in a very kind of slow way with a few bumps. We had a bump here at the end of July, the beginning of August. We had a bump, remember, kind of around the last AI cycle we did at the end of October, and that where people worry about October being a bad month. And there was that bump, but nope, it was a one-day affair. By the time 2 days went by, it recovered all of that $850 loss that you see right there. Let's kind of zoom out. That was an $850 loss in the S&P or the Dow. And then it rallied back, and now we just came off over the last 2 days, last week actually, and we came off again. And these corrections, as you can see, this one here was one. Here was another one, a little less. Here's another one. It seems to be a little less, especially if we rally again tomorrow. That's the Dow. Let's take a look at the S&P, because the S&P is the better prognosticator. The Dow is only 30 stocks. And by the way, nowadays, folks, you might see a lot of times the Dow may be up a few hundred, but that means in the Nasdaq, though, could still be down a couple of hundred. So that is something we rarely see years ago. But today, it is very common to see that. And so what does that say? It just says that the 30 stocks have a barometer that where those 30 stocks do not represent the market. They represent a portion of the market. So if you tune in the morning to look at the markets, make sure to find where the S&P is. That's what really is important at this point. Sorry as I maneuver around here. So here's the S&P. Again, that terrible like 2% down day in the S&P, all recovered within a few days. Same thing, made a new high, came back down the other day. Why? Yesterday, it was the election. People were nervous about it. And guess what? Um, in a way, we have a socialist winning in New York. So they actually won in a big way by landslide margins by most any definition. And the market kind of bounced up today. Took a little selling at the end though, but I don't think that really means much. Probably will open a little higher tomorrow. Nasdaq, kind of the same thing. I'm going to look at this, which is the broader market Nasdaq. Um, Same thing. I mean, we made a new high after that big dip that we saw in October, and then here we are, and we are right now only approximately 500 points off of 2,400, 2% off the high. I mean, the highest print ever. So I don't call that a correction yet. Apple basically made new highs even the other day. It's probably going to make new highs from here. Amazon made this big gap high, and then it's holding on to it. When you see this kind of formation, it really does likely for it to go even higher. Amazon, a lot of the projections now are to $300 a share, and that's kind of in line with what I'm seeing. But here we sit at 250. Amazon looks strong. Google, kind of the same thing, new highs. Really, what I'm doing is the Mag 7 here. Now, here's an exception. Meta and Netflix are kind of exceptions. Meta, of course, had some news about a week ago, got hit, came down. It's kind of well off of its highs from around close to 800. We're now sitting at 636. I think Meta is a buy here. Anything below, this is a 200-day moving average here on the orange line. Anything below is generally a buy, especially in an overall bull market. So I'm looking for Meta to go back higher. We're still long, I believe, in the big tech portfolio. Microsoft, again, it's printing new highs. It's been stagnant for a while, pays a small dividend, worth it to own. It did, but keep in mind where it came from. The April lows are basically 350. It's $150 higher. So basically, it's gained about 40% since the tariffs, which are, by the way, under challenge right now in the Supreme Court, that came out, those announcements in early April. Nvidia was at 206. It came down a bit. I think we're now long Nvidia finally in the big tech portfolio. That's something notable. So I'd say overall, the big tech Mag 7 stocks look good. There's just a couple of small exceptions, and they will probably represent the transfer of assets when things don't look quite as good in Nvidia or Apple. And then the things that'll hold them up are Meta and Netflix, which is the way it's been. Oil, let's move there. Well, I think the government, as everybody knows, it's a big deal for our government to get the price of oil down. It has done that. And prices are definitely down at the pump. Although we're noticing in many states that a lot of the taxes that states charge for gas have also gone up. So, because states, of course, are devoid of money and they need more money. If they see cheaper gas prices, it is an easy way to throw a couple of cents more on any municipality to get a little extra revenue for the states. But this is part of the vicious circle of wage price inflation. Very difficult for this to be overcome. And I'll have to mention a quick story anecdotally. Back in the early 80s, we had the same problem. It took 10 years to solve it. It was created under the Carter administration. Ronald Reagan came in, and guess what? He couldn't fix it instantly. It took Paul Volcker to come in, replace an existing Fed chairman, and then raise rates through the roof. And literally, pardon the expression, pissed everyone off because now interest rates were way higher and that stagnated the economy, but it strangled inflation away. But it still took his entire presidency to recognize it. And here we are here. Trump is 8 months into the administration. He was promising that these be fixed, but honestly, no inflation can be fixed like the one we just had within 8 months. I'm going to tell you that I believe it'll take 8 years. His entire presidency will be a reflection of that desire, but it will not occur over the next 3.5 years. It takes time to remove inflation. That's why it's so deadly. That's why the promises of any politician towards inflation and lowering it are moot, false promises. It's sad, but that's just the truth. If we look at the individual stocks, though, they're kind of hanging in, at least in the case of ExxonMobil. ExxonMobil hasn't really gone anywhere, even though oil has gone quite a bit lower. Here's the overall index, same thing. The highs of oil prior to the election were last year, and that was around 96. We're only $10 off that on the LE, which is the index for the oil sector. The things that did get hurt are the pipelines. So the pipelines, if we look year to date, things that we like. Here's a case of Energy Transfer, came in at around $19.50 a share. It's at about $17 a share now. So it's down $2.50 from $19.50. Well, guess what? That's 15% lower on the year. And that's, again, if we look at it, I think that's what it says. If we look at All Plains American, something that we all know we kind of own heavily, we came into the year, the interesting thing about this one is we came into the year right around $17 a share. We're about a buck lower than that now, maybe a little less. So we're down only about 5% in All Plains America for the year. But at one time earlier in the year, early in January or late in January, it printed almost 21. And so from that price, we're down significantly because we hit that 21, it's almost $5, $4.50 on a $21 stock. It looks like 30% drop from its all-time highs. So this is something to keep an eye on. Some of this recent movement, okay, there's a dividend which just paid. Look for Energy Transfer, went up 36 cents today. Look for that to all go away, as the expected dividend is going to be about 33 cents. So normally the action on this is it'll go up into that dividend, which is Friday. It'll go up maybe another 10, 15 cents, and then it'll drop 60 cents from the dividend of 33. It always does this. Interesting. I'm looking at it closely. I'll skip these things because these are just indices I look at. The banking sector, kind of the same notion, close to their highs. There's Morgan. Here's Bank of America. Here's the stock we own in some portfolios, Fannie Mae, just sitting there. But it's moving. It seems to be holding in and maybe move higher if we have some legislation. And that's why we might want to own that. Here we go to some of the regular stocks, and I'll get into crypto at the end. And then we can go in for some Q&A if there is any today. Where do I begin? CrowdStrike, basically at new highs. Hit a high, came off yesterday, but kind of recovered again today, up a little bit. Tried to follow through, but it didn't. Carnival Cruise Lines hit around 32, down to 27. If the economy remains as it is, it'll probably go up and go to 35 on the next move. This is Digital Realty Trust. It's a company that is involved in making data centers. It's been steady for a while. However, it does pay a dividend of $1.22. That's pretty good. Basically works out to be a $5 dividend over the year. It's about 3.5%. And if the markets are right, it should be able to participate in any data centers that get built, because that's the company that does it. Landbridge seems a stock that we own in a lot of portfolios. The Shield, it's in the aggressive, it's in the balanced. It's actually starting to recover for a year-to-date move. Let's see where it is year-to-date. Year-to-date, we're basically down $5. We're down about 8% on the year. This is a holding that I personally believe in. The AI is managing it, but there's nothing much to manage when the market is staying in a tight range. Pays a tiny dividend, so that's not the reason we're here. We're here again for the reasons of the land and the infrastructure. They are related to All Plains American and Energy Transfer. I'm going to go to the other one that's similar, which is Texas Pacific. If you notice, kind of the same thing. Texas Pacific is down about 11% for the year. It feels much worse. Why? Because look what happened last December. Last December, it moved literally from the middle of November. It went from about 960 all the way up to around over 1,700 a share. It literally went up almost 80% in a few weeks. We own it for the next run like that, and we're just in a steady frame. Remember, this stock doesn't trade much, so it's a piggy bank. It's literally, it's $900 a share. I like the stock. It's just patience will be your virtue in the ownership of this stock. I'm going to go to Planeteer. A lot of people heard about this in the news as overvalued, an example of a bubble. And why? Well, let's take a look. 2005, it came in at 76. It's up over 100% on the year. Many of you own it. It is part of a couple of SmartFolios, but it just had a down day the other day after incredible earnings, hit their targets. But the market was so overbought at 206 that it literally lost $20 from yesterday, or sorry, 2 days, yesterday and today. I like the stock. I think it's going to make new highs. So I look at this as a buying opportunity here, even though it's only like a quick 9% drop. But that's 9% on a stock like this is something worth looking at to buy if we were just overall buyers in the market or sellers. And here we are with the AI. It doesn't do anything because it's not enough of a move. Let's go to Tesla. It's just hanging out at basically all-time highs that it hit earlier last year before Elon Musk got involved with Doge. Hit highs. He left Doge down here, right back up to the highs. Interesting how a CEO goes back to his business and things do better. I think that's noteworthy. Let's kind of go to crypto now. I'm going to move over to the crypto page. Crypto, what a market this year. So let's look at it. So year to date, look at crypto. Here's where we came in right here. We are up about 10% on the year. That's it. Maybe 11% on the year. But we are down literally from about 125,000 per coin all the way down to 103. So let's just call that essentially a 22% drop since the beginning of October. So a month that's gone by, we're down 22%. Why? The stock market isn't much. Bond market isn't doing much. Interest rates were cut twice, once in October. It's just the market. It's the end of the year. People could be using it to raise some cash. I personally think, again, like I do a Planeteer, this is an incredible buying opportunity. Let's see if people take advantage of it. Another noteworthy thing, and I'll end for you, Lee, is the futures. And I'm going to look specifically, let's take a look at gold. I think that's worthy of a look. Here's just gold futures, which have been going up. And then we had that mega move down, if you remember. It was a 10% down move in a day. And here we are. And we're just holding out. This is a bull market. Look at it. Look at how far back I can go. And in a big bull market. 10% drops are generally to be bought. So I'm patiently long gold at these levels personally. Let's look at the currencies in the worldwide markets real quick. Look at the DAX. Basically, the DAX is on its highs, but it hasn't done anything since the recovery back from May, but it's on its highs and holding in. FTSE, brand new highs literally yesterday. French markets looks a little bit more like the DAX, basically up on the year, but not significantly. Hang Seng, definitely up on the year and doing well. Let's take a look at the Nikkei. Look at this. This, I believe, could be printing all-time highs. I'm not sure of it, and I should look back, everyone, so forgive me. But I do remember in the early 90s, literally 35 years ago, the Nikkei hitting about 48,000. We're now at 51,000. This is interesting. Probably a little bit due to the new prime minister, but the Japanese market is definitely rallying. Finally, let's look at some currencies. Where are they? The currency futures. No, I have them over here. Sorry. Let me open the list, get the currency futures. Dollar index, it's actually recovering. Dollar index hit a low of about 96.5. Had a high earlier in the year of around 109. It's 100 now. So basically the dollar index is down 10% from its highs earlier in the year. The euro is at 114. I actually thought the euro would be a little stronger, but it's not. It's because of the problems in Europe and the issues that, if you look at France and you look at England, there's a change going on there with their politics. And I think that is making their markets nervous, and they're looking to buy some dollars to be able to wonder how their politicians are going to be changed in the near future. Remember, no political party in Europe has solid control. I'm really just talking about Germany, Great Britain, and France. Italy, a little different case. Great Britain, British pound, weakening substantially from its all-time highs, or close to its classic highs of about $1.36. It's gone down 6 cents. And believe it or not, folks, that's a big deal. That's a lot. Here, let's look at this is the Mexican peso. We don't look at this steady, but basically the Mexican peso has done really nothing for the most part. It's something to keep an eye on. Finally, the yen. Well, the market over there, as we know, the stock market's on all-time highs. And the yen, of course, is getting a little stronger. That's kind of the strongest I've seen the yen since the beginning of the year. And lo and behold, it is basically about $1.50 per yen. So what does that mean? I think the yen gets stronger. Nothing to do here. It's just overall, when you look at the markets, you look at all things. All right, I covered most bases. Lee, if there's any questions.
We'll get back to stocks in a second, but just for the person who's not in tune with currencies and all that, when you say the yen is stronger, this currency is weaker, put that into perspective of, say, you're traveling to that country. Where does your dollar go? Do you get more for it? Do you get less for it?
Well, if we're going to Japan, we're going to get less for it. But if we're going to Europe, right now it's $1.14. Earlier in the year, it was $1.09. Not too long ago, it hit $1.17. Our dollar will not carry as much right now as it did earlier in the year. This is the case also in Great Britain. Earlier in the year, I remember the pound was around 120, and now it's around 130. So we get less for it. In other words, our dollar has weakened overall this year. And that means when we travel, we got to pay more for things because our dollar doesn't give us as many of the currencies of the countries we travel to.
Right. And you kind of said it, but the reverse is also true. Anyone from Japan coming here, their dollar's taking them a lot further than it has historically.
Their yen will buy more
I
dollars.
said dollar. I'm sorry. Yep. Good catch there. Steve in the chat had a question, and this was at the start, but he said, speaking of AI, what are your thoughts on, and there's 3 symbols, they're all AI related ETFs. I don't know if you have a opinion on them as a whole, or if you're familiar with any specific ones, but that was what his question was around.
No, I am not really familiar with AI ETFs. And there's a reason for that. It's because, again, we practice AI here. AI ETFs are companies that are probably betting on the companies that are AI specific, meaning that we hope that the AI will make all these companies that are publicly traded go higher, because everybody knows AI is such a big thing. We are a particular company. It's a good question. We actually use AI. If we were a public company, and one day we hope to be, we would be one of the assets inside one of those portfolios. We are a user of AI, not a creator of it. We use AI to make predictions that help us solve problems, which are most important to us. Is, can AI help us predict the future of stock prices? That, of course, is why everyone is here. I hope everyone that has got a Flip account is here for that reason, because what we found, and the reason this company exists, is that the predictions made by AI as to when we should be in the market or out of the market tend to be pretty accurate. And notice I hedged my words: tend and pretty. And pretty accurate, tend to be. What the it's a huge. This is a question that I would really like to do a 20-minute or even a 10-minute webinar on, to try to describe it. But no, I don't follow those right now. I don't think that that's where the business is. I think of those kind of things as more like ARK, Kathy Woods' product, where they're trying to find all the AI companies or all the technology companies. And what we've noticed is those things can be explosive both on the upside and the downside, and very difficult to manage mathematically, which is, in other words, can we make good predictions on them? So no. And the reason I will even add to that is we tried modeling ARK, and it didn't work. In other words, we couldn't get ARK to be able to manage certain positions with machine learning. And actually, we've learned something from this. Machine learning has taught us quite a bit about how it works and where it is extremely effective. But that is, by the way, a proprietary secret held by the company.
Yeah, I was going to say, not to put words into your mouth, but like, I just looked at one symbol that he put in there, IGPT. That's one of the ETFs. I think this would be a similar comparison that you made, like XLE and ExxonMobil. I don't know what the performance returns would be, but like if you compared Nvidia, let's say, to this IGPT, they've both done great. Don't get me wrong. Nvidia, as kind of the leader, is up around 45% or so for the year. IGPT is up right around 28%. So they're both still doing amazing, but you're kind of, in my sense, you're diversifying your assets into the whole quote unquote sector, if you will. That ETF is going to have some losers in there. Not to talk bad about any of the companies, but I feel like our stance, especially with, say, like our big tech or our Mag 7 portfolio, why do we need a tech focused ETF when we can just kind of buy the top 5, 7, 10, etc.?
Well, yeah, and keep in mind, even stocks as old as Google, which has been around for a long time. I mean, it came into the year at 190. It's at 285, so it's up $100. That's up almost 50% on just a single holding. I prefer those things if I could get them that way, as opposed to buying an index or an ETF that represents that. The idea of our science is to try to find the companies, individual companies, that are going to do things like that, and then apply the machine learning to their data. And keep in mind, we're actually looking into a different science, everyone. That means that we might be able to find information that would help us trade stocks that are relatively new, as opposed to stocks that have been around a long time. And the reason is machine learning requires a lot of information to be able to determine how to see if we can predict it. But that doesn't mean that something that is new, that it might have a high correlation to one of those indices, or sorry, other kinds of products, that I might be able to use the signals from similar products to navigate the ownership of newer products. I'll give you an example of is Landbridge. Landbridge is a company, if you notice, it only started here in July of last year. Literally, it's a year, almost not even a year and a half old. Well, that's not a lot of data. But Landbridge is a lot like Texas Pacific, which has been around literally forever. So, and they move very similarly. In other words, they're correlated. We're looking at this and said, hey, can we use this stock to help trade that stock? Or, by the way, this set of stocks that are correlated to trade the brand new stock that we don't have enough data on, using that overall signal. So we're trying to apply science to newer symbols because everybody wants, including me, wants to have the next stock that we don't know about that some company is going to go buy just because it's there. Not because they need it, but because it's there. It's good, but because it's there. That's the way these things are done. I'll give you an example of a stock I'm looking at. Miami Exchange. Look at it, just came out when? August 14th. Hasn't, but it's the stock I'm looking at. Is there something in here? Is there something else I can look at to help me make a good decision here? So here's a new stock that nobody, very new, but it looks like it has potential. Everybody's going to look up what it does. I won't go into that. But my job is to say, hey, can we find some way to help us navigate the ownership of this? We want to own it, but is there a way we can get signals to manage the risk? So that's the business, risk management, to try to prevent large scale moves down.
Yep. And I'm not seeing any other questions, so I'll just wrap it up with the Black Friday deal. We briefly discussed it last time. Now I have some things that I can share with you guys. I guess, Kelly, was there anything else you wanted to say before I?
Nothing today. Again, until the next time, it's going to probably be exactly more of the same.
Yep. All right. And I'm assuming you can see the screen now, Kelly.
I can.
Cool. And so I put these links in the chat. So there's a different one if you're an existing user versus if you're not yet an iFlip user. So just whichever category you fall on under, depending on, of course, if you want to take advantage of this. I don't see any downside not to. So please take advantage of this. But this is our Black Friday deal. It's going on right now. Actually, it is live. If you haven't already, you're probably going to get an email about it. But really the requirements are very simple, very similar to last year. Sign up between essentially now and the end of the month if you deposit $5,000 or more. The key part is into a new iFlip account. So if you're an existing user, say you have a brokerage account, you could qualify for this by opening up an IRA or another type of account. The only requirements, again, $5,000, keep it invested for 6 months, and then we'll send you a $250 Visa gift card, which is essentially as good as cash. Here's a little step-by-step if you want to, but like I said, both the links are in the chat. If you guys have any questions on these, I would be happy to answer them. I don't think we're going to have a ton else to go over today, but like I said, both are in the chat there. And it looks like we do have one question. Kelly, I thought you might be starting to say something.
No, I was just saying this. My hand I gesticulate just like Gavin Newsom. Forgive me.
Let me move this to like a Q&A type setting. I think Zung has asked this question before, but just, the going into cash side of things on the platform, anticipating a crash, should I do it myself or essentially let the system do it? My very short answer would be using the SmartFolios for a reason. Let it calculate all the data points and figure out the risk reward and if it's worthwhile to stay invested. You might have something more technical to add to that, but that's the simple explanation on my end.
No, it's the same thing. Anybody that tries to navigate the markets with their cash generally loses, and that includes me. The thing we all have to understand about markets is they go up on that wall of worry. And when you try to think that you, or including myself, who has a lot of experience, think we can time the market, it is very difficult, and it's very unlikely that you will be right. Matter of fact, if I just had to pick day over day, I'd say 15% of the time you might be right. And you better, when you are right on those times, you have to make a great deal of money for all the times that you could have been right by just staying long, which is 85% of the time.
Sure.
So the thing about markets, they go up 85% of the time. Finding the times when they go down is extremely difficult. Even the best have troubles with it. And what I found over time, to the person that asked that question, is the best only hedge when they see that. They don't go short. They short only because they don't want to get out of their ownership of stocks. And the short is there to protect them for that 15% of the time. And it's not like they do that necessarily to prosper. So it's the classic thing. You want to be in the market. We just want to avoid large downturns. And the only final thing I'll add to that before we sign off is I don't see where the real negative is until the end of the year or even into the early part of next year. I just don't see it. There is nothing really hanging over our heads except fear itself.
Yep. I'll do one more screen share to kind of answer this second question. It's talking about cash and if the AI will, invest it back in essentially when it's worthwhile to. So I'm going to pull up, and I actually pulled up the aggressive portfolio when you were talking about the Mag 7. We actually sold Meta, it looks like, I think this morning. Yep. So you made a comment about, you said, I think we're fully invested in the big tech.
Yeah, I think
it looks like that was true yesterday.
Could have been Meta, because of the drop. Yep.
Yep. So this is the aggressive portfolio, essentially everything with an orange dot next to the symbol. And as I hover over it, it shows this, but we're in the market or we're invested in that stock. So we don't own the SPY as it presently sits, nor do we own Meta or Merck. So 3 and 4 is 7 plus 24 is 31. So essentially, to keep it simple, there's 31% that's in cash in this portfolio right now. At some point in the future, it's going to become worthwhile to buy the SPY or to buy Meta or to buy Merck. And that's exactly what the system's designed to do for you. So it'll not only sell those positions at the opportune time, but it's also going to buy, these three. And I'm not insinuating it's going to be at the same time, but eventually you're going to get back into these things as well.
Yep.
I think we're going to conclude there. Don't see any other questions. My apologies again for starting the 2 week ahead show. I wish, like Kelly said, I wish we could go 2 weeks ahead, figure out what the market's going to do, and then report it back and look like geniuses today. But that's just not realistic. So
if I'm coming back from the future, everyone, I promise to immediately create a webinar, get the emails out.
Yep, we'll all know exactly what to get into. So with that being said, the next one is going to be in 2 weeks, so November 19th. I said this last time, but we'll probably only do one AI circle in December, just how the holidays kind of aligns, and Kelly and I will be traveling a little bit as well. So we'll see you guys November 19th, and then I believe the next one is December 10th, but I will give you the definitive date next time. So with all that being said, thanks for being here. Sorry again for kicking this off a little bit late. Kelly, thanks for the insights as always, and we'll see you guys back in a couple weeks.
Thank you, everyone. All the best. Happy holidays.
See you guys.